Due to the dearth of high-tier data releases and the improved risk sentiment, gold slightly increased to begin the week. Global equity indexes surged in response to a Bloomberg report indicating that China was considering implementing a $27 billion rescue program for the equity market. Gold could not extend its Monday gains into Tuesday, whereas the yield on 10-year U.S. Treasury bonds remained stable above 4%. The S&P Global Composite PMI increased from 50.9 in December to 52.3, with the services PMI reaching 52.9 and the manufacturing PMI becoming the first to surpass 50 since April. As a result, the yield on 10-year U.S. Treasury bonds increased marginally, leading to a weekly low of gold USD below $2,020. Gold, meanwhile, was able to mitigate its losses despite escalating geopolitical tensions, as 2 U.S.-owned commercial ships were reportedly targeted by Houthi militants backed by Iran late Wednesday near the Gulf of Aden. The Bureau of Economic Analysis, BEA, released data on Thursday indicating that the United States' real gross domestic product, GDP, grew by 3.3% annually in the fourth quarter. Although the USD was initially strengthened, gold USD was able to stabilize as US yields declined. Additional US data for December indicated an increase in weekly initial jobless claims to 214,000 and no change in orders for durable goods. Moreover, in comparison to the third quarter, the Personal Consumption Expenditures (PCE) price index increased by 2% every quarter, mirroring the rise of the GDP price index from 3.3% to 1.5% in Q4. As per the gold USD weekly forecast, a bearish range extension is potent, targeting the 1972.80 support level. However, any immediate bullish pressure above the 20-day EMA could offer a short-term bullish opportunity, targeting the 2088.94 resistance level.